Hello, once again, I welcome you to the channel. So today, I want to share some simple trick understanding order flow or the relevance of big time frames. It's really, really important. And for this case example, we are going to be using step index. And I think for the first time, I'm going to start on the weekly time frame. So basically, when should you go on big time frames? I told you, for purposes of understanding the overall trend, and we don't look out for much on big time frames. But why have I come on the weekly time frame? First of all, for step index, ever since I did a video and we were about here, we shall go on the daily time frame and we shall see that we tapped down into a demand zone and then we moved up. We are moving up, you get? So it's not always good for you to go against the trend, but just remember this is the weekly time frame. We are just looking out for the buyers. So that's the first point. So it doesn't take up a lot of time, but it's really, really important. Then the next thing that I wanted to show you is that if at all I was on the daily, let me even zoom out a little bit. If at all I was on the daily, uh, let me zoom out like that. And then step index is moving up. You get? It's moving up from this point up to, let's say, where it is currently. I don't have any reaction points that I can consider, you get, because it passed this, let's say, these highs. Because if I told you were buying here, probably you would be targeting these highs for you to take your profit. But then sometimes when time comes, when you're trading, this is a trick. When you're trading and then time comes when you're not seeing the market structure very, very well, remember, we are using price action. If I told we had, let's say, some moving averages, probably it would work. Like we could be targeting a certain moving average, but this is price action. So now what do? I can move up, I can step up on a big time frame to see what's really going on. What am I going for? So we can see that on the weekly, we've gone for this swing high that you're seeing over here. So which means we are in a strong bullish trend. Now the danger is for you to take buying entries immediately right here, because you can see that this has been a very, very strong bullish trend, as you can see. So many times you can get trapped as the market is moving and you don't know whether you should take entries. So it's most likely that when you go on much smaller time frames here, you'd be buying, and then the market may crash onto you. So that's the first thing. Then we have some targets to hit. Given that we're in a strong bullish trend, as you can see, what do I expect after going out, after taking out a swing high? I would expect we start with anticipation, expectations. Now I can start to anticipate that the market will come back into the zone. The market will come back into the zone before we get a significant push up to this level. You get? But now this is just the weekly. I just want to put it straight to you that this is just the weekly, unless you're going to swing long term. But then you're going to get the perfect sweet spots on much smaller time frames. You get? So at least that's what we anticipate, because we know the market first sells to buy. You get? We create an order block, so which means we shall be looking out for an order block. If at all we are going up, you get, the market could significantly come back into the zone before it buys again. You get? So that's what I wanted to bring out. So that's why I've come here on the weekly. So I can go back on the daily, and I told you still on the daily, I don't look out for much. But then what is going to be really significant is that I have this. Let me first go back. You get? Now, this is the area. You get? This is the swing high that we've taken out. Now, I told you here, we look at the market structure. It's likely that we tap into back into the zone. So which means here we are going to be looking for some selling confirmations. That's it. That's what I wanted to put you. Unless otherwise, at least the market has to significantly pull back into the zone before we go up. You get? So that's the next thing that I want to bring out to you. So now let me go back to the daily time frame. So what do I love about TradingView? It's that it's flexibility, but the only challenge with TradingView, I cannot go on the weekly time frame. You get it only stops on the daily time frame, and that's what I hate about it. But then it's okay. So for me, for my analysis, I always like doing it on TradingView. Sorry, I have some little cough, but it will be okay. So now, this is the swing high that we've been seeing there on the daily time frame there. Like on the weekly, actually, this is the swing high that has just been taken out. You get, this is the swing high. Now we are seeing it here on the daily time frame. You get, so this is the point that has been taken out. So this is a point of, actually this is a point of supply. You get, so there are, actually in previous videos I think I've addressed the issue of supply, so I believe you guys can understand supply and demand. I believe you guys can understand. If I have not yet talked about it, for those that have been following, you can comment down below so that I can cover it, but I believe I talked about supply and demand. So this is a supply area. But then we saw that we have another supply area above, you get? So which means this one, given that we are anticipating that this is a swing high that has just been taken out, we could move significantly back into the range. So now, what are we looking for now? Now we are following the order flow. We started on the weekly, now we are going on the daily. Now we are going to look for what we call internal reaction points. You get internal reaction points. There are some points that you could not see on the weekly, but then they are going to be visible on the daily. You get, and then there are some points that are going to be visible on H4 up until H1 and M1. You get, that's the next thing that I want to bring out. So now, the next thing that we want to see, we want to look out for the most recent order block. You get, on the daily time frame. Now this is the area, if at all it is uh, um, we are in a bullish trend. You get, the most recent order block, the most recent bullish order block. You get, so which means if at all the market is coming down, where could it come to tap into? Let me get this arrow here. You get, where could it come to tap into before we move significantly up? You get, because we know the market is likely to go up. You get, I'm still saying is likely because we confirm our entries on small time frames. So now we can see that over here, you get, this was a bullish trend on the daily. This is an imbalance. You get, so which means the market has to come and rebalance a little bit. But I told you, if at all we get a very long this is a very strong bullish trend. You get, so we don't want to go so much against the trend, so which means the market could just retrace back into the zone. So which means I can use my discount premium tool, you get, to start looking for the possible area where we have an order block. I told you, if at all you are going to significantly move up, you get, up, as you've seen on the weekly. Now I look at the area below the neutral, like below 0 point, actually an area below 50, you get, into the discount. Now we can see that we have an order block here. You get, now let me first delete this discount premium tool. So this is a bearish candle. You get, but then it has wicks, long wicks on both sides, like on both sides. Now, what do I consider? I will consider, personally, I will consider the body. You get, so now the details, by the I go much into the details why I've considered the body like during mentorship. Basically, you get, I don't want to make this video so long. So this is where the candle body, this is where, you get, this is where the most of the activity lies. You get, and I believe given that this is just a single candle, I believe the order block was just here. This was manipulation up and down. You get, this is what I want to mean. So if at all that is the candle body, and then I have wicks, long wicks both on top and at the bottom. So which means here, this was a manipulation. They were hitting up and they were hitting down. You get, so which means the serious activity, the order block lies here. You get, and then we shall see that. So which means I'm minimizing, instead of marking out this whole candle, I want to zone out the exact area where I expect the order block to be. You get? So which means now I'm about to leave the daily time frame. You get? I'm about to leave the daily time frame. So now I've identified the area where possibly, if at all we've taken out this high, the possible area where I would be coming back into. You get? So the daily time frame confirms to me that this is the area that I should be eyeing out for. So which means if at all I get confirmations to sell here, you get, this can be my target, this area here. You get? This area here. So now we've understood that. Now what do I do next? Now I go to H4. So here we are on H4. So I think you can now know this is the area that we've highlighted on the daily. You get? And then we shall see when we go to H1, but at least you can see. Let me quickly explain to you just this area because it's one of our targets. I'm going to explain these two areas. Now we start eliminating these areas where we started, and then this area where areas where we are actually. Now what am I doing? I'm starting to eliminate this area down, and then I'm considering this area as you're seeing, let's say from this point to this point here. That is the area now that I'm focusing on. So which means the more I go on small time frames, I'll be just looking at this area as you're seeing. You get? Just that area. Why? It's because it takes days. It takes days. Let's say the market move from here to down here. You get? So I don't want to be wasting a lot of time. Now, the next thing, it's really possible that this area of demand will fail, or this order block will fail, and then the market continues. You get? The market continues down. So which means if at all I'm just looking at this area and then the market is approaching here, if I don't get buying confirmations, I will just hold my entries until I come down. You get? So that's what you should be looking at. It's not always that when you predict the market must go. You get? It must no, it's not a must. You get? So now I'm eliminating some of the things. Remember this point here. This point here is the high on the weekly. Let me even first go back and I show you. If we go back on the weekly time frame, that line is just this one that you're seeing here that we've just gone up of. You get? So don't forget when I go back. So we are coming back into the zone. Let me go back to trading view. I just want to make sure that everyone is following very well. So now let's proceed. Now we went above this high, and now what do we see on H4? Now we can see that before we went above that high, we have another order block over here. You get? So which means that those points, those reaction points, this is a point of interest now. You get? This one becomes a point of interest. I don't think it will hold. You get? I don't think it will hold. But then it's possible that the market can come here. I'm trying to show you how you're going to be dealing with those reaction points. The market could come and tap into this area here, this region here, and then it may even first go back. You get? It can even first go back, even past this area just over there. You get? It can even go above this high, and then you think getting sniper entries is easy, and then it does something like this. You get? But then all this is just a visual thing. Like I'm just visualizing. You get? I'm just visualizing. Then after visualizing, time comes when I look for entries, and then at least as the market structure is happening, if it doesn't happen this way, it's just okay with me. But at least for now, my best is to sell. You get? My best is to sell. Let me even delete these ones. So now I'm proceeding. Now at least H4. Remember this order block here. We're not seeing it on the daily time frame. Now, what else do we see? Now on H4, we start seeing something really important. We are seeing this swing low that you're seeing over here on H4. Now this is a very significant point of interest. What does it mean? Now, as the market comes, I'll be eyeing, if at all I come below, if at all I get a candle that closes below here, you get below this line, This one will become a break of market structure. So in the end, here, for those that are going to watch right away, if they get in here and then the market fails to break structure here, you get, then the market will just have consolidated, and then maybe we are continuing to push up, because remember, on the weekly we saw that we have another supply area, you get. But this is the break, this is the swing low that I'm targeting to take out, you get, to break. So which means if I'm on the H4 and I get confirmations to sell, you get, this one becomes a take profit points for scalping, you get. At least if at all, I this one can act as a take profit point, because this is a big time frame, this is H4, you get. So now let's go to H1. Remember, now you can see that the H4, we can see that on H4, or actually on the daily, we're looking at the zone from this point to this point up here. Now, H4 is reducing the zone from this point to this point here. You get, this is the point of consideration. But remember, when we reach here, you get, when we reach here, we have another point to consider. So as we reach here, we may know just that if at all, when the market taps into this one, what do we look out for? We may anticipate that the market will push back into the zone, you get, just push back into the zone, and then it comes for our target. But remember, the other thing is that for these synthetic indices, it may just choose to come down, because you can see for them, they can just trend, you get, they can just trend and then they go for the targets, you get. You should also put that into consideration. So as you're holding here, you just know that the market may even not even bother you to come back, or else the market can consolidate here for about a week, and then it lives comfortably well up to this point, you get. So now let's go to H1. This is the order flow. This is how I do the order flow, and it really works. If you need guidance, you can text me. The link is in the description. If you need one-on-one guidance, you get, even in Forex, even in synthetic indices. So this is the swing low that we are targeting, you get. But then now H1 is just confirming to us that now we are really bearish. But H4, at least H4 is really a significant time frame. So we are aiming for this, you get, we are aiming for this. Now um what should I bring out next to you guys? So now there's something really important that I wanted to bring out to you. Now for this one, the, for this one, let me quickly show you something. Actually, I'm going to go back on the daily time frame. Now on the daily time frame, there's something really important that I was missing out. Now remember, this is the supply area that we are looking at, you get. This is the area where we're looking for confirmation to sell. Now the next thing I told you, on the daily time frame, you get, on the daily time frame, there's something that we really need to consider. When we see these candles with the rejections, actually it was the first thing that I would bring out. The moment you see that we are here, and then this is a loss in momentum, you get, this is a loss in momentum. But then you can see that this candle, this kind of candles signify that the market has tried to go sideways a little bit, but then you can see that it's even bullish, so which means this is still a strong bullish trend, you get. But then given that we are in this area, when you're scalping, now for me, what do? I draw a horizontal line. Now I'm going to draw a horizontal line, and then I'm going to change the color. Let me change its color to red. I told you, when I see this and I'm in an area where I expect, let's say, a reversal, you get, a reversal, what do I do? When I see something like this, I draw this horizontal line, and then I cannot take buying entries above here, you get, which means here they will be manipulating. Above here, I'll be looking for sales, you get, because at least now this one becomes the upper limit, and then this one becomes the now target, you get. So now we are going to go back on the H1. I was just forgetting that point to bring it out. So you can see that on the daily time frame, there are those simple things that you start to consider. You leave out the wider anticipation and the wider big like market structure, and then you consider something really small. So this is the red line, that the red horizontal line that have been drawn, that have drawn. Now you can see that uh, the market went up a little bit. Just you can see how aggressive it was. It shot up. Now, for those that were buying here, sorry to them. You get, sorry to them. And then the next thing, that what would I consider to take selling entries? I shared this strategy. You get how you can eliminate. Now you can see that there is this candle here, the next candle, the H1 candle that you're seeing here. It has long rejections on both. You get, but remember, my anticipation is to sell, and the candle is bearish. What do I do? I highlight the upper part of it. You get, what do I expect? The market always taps back into the zone. You get, so which means the moment the market comes back into this area here, I just sell. So this is how you would pick out the selling entries of today for step. You get, for step, you just sell the moment we come back. You sell, and then at least this one is your target. You get, this one is your target. Now I think you're seeing how we are reducing, we are reducing, we are relating these big time frames, because on the daily we highlighted out this point, and then we are like beyond that point we are not taking any entries uh, to buy. And then you can see apparently we are breaking even in structures as we come down. You get, but then I told you we are likely to come back into the zone. You get, we are likely to, the market will push possibly down here, and then we come back into the zones for those ones that have not taken selling entries. You get, for those ones that have not taken selling entries, at least for now I know we are going to be targeting these lows as you've seen. You get, and then the next thing, before I close out the video, I always go to MT5 just to show you how these things are happening. This is M15. You get, this is M15. You can see that on M15 I even turn on the period separators. This was today. This is how it started today. You get, now you can see that the market shot up. You get, it shot up. Now this is a reversal day. You get, to me, there is that day when the market is just working on the reversal. You get, just working on the reversal. Now yesterday was the day when the market was pushing up above the daily, this line here. You get, so the market shot up. You get, and now here what they're working on is reversal. Now tomorrow the market will just push back into the zone or this supply area here, when on a much smaller time frame, like the market will just tap back into the zone, and then it continues to sell. You get, so I'm not going to go into the details of how you're going to be triggering the entries, because I think maybe that one for another time. But at least now I've showed you what you should be expecting on step index. But most of all, for you to understand how you're going to be relating big time frames to small time frames, like understanding the order flow. Anyways, for now, I want to thank those that always watch my videos, those that have turned on the post notifications. I wish you the best in trading.